And now to our market monitor, who is finding opportunity in the healthcare sector. This is not her first time on the program, but it is as a market monitor. Joining us is Nancy Tengler, Chief Investment Officer at Heartland Financial. Good to see you again, Nancy. Welcome back.
Thank you, Sue. Good to see you.
Let's start with your first pick. It is Amgen. The stock is up 20% year to date. It still has room to run in your mind?
It does indeed. The whole healthcare group began to underperform, particularly biotech, when Hillary Clinton tweeted last spring about drug prices. We began to buy pretty aggressively. And though the stock is up, it yields about 2.6%. The dividend growth over the last 5 years has been about 35% per year. And it's trading at a below market price to earnings ratio. So that means it's cheaper than the market, but it's growing faster than the market. So we like this stock a lot, and we like the group in general because the dividend growth is about 2/3 of total return for stock investors over time. So it's very important to collect that dividend. Yeah.
Speaking of which, there's Johnson & Johnson, an old chestnut from the entire sector. It hasn't performed stock-wise as well as some others, but it does have that rather juicy dividend, doesn't it?
It does, Bill. It's good to see you again.
Nice to see Nancy.
So up about, yield about 2.6%, grows the dividend about 7%, a year over the last 5 years. But this stock's up 10.5% over the last 20 years. Annually. So that's compared to an S&P that's up 7.7. So because of its diversification, it never really goes to the races, but it does generate just stable, steady returns. And they've really put an emphasis on the pharmaceutical side of the business, and that grew 12% last quarter. So we think this is a great way, despite risks of the talcum powder lawsuits, this is a company who has a history of doing the right thing, starting with the Tylenol cyanide problem back in 1982 that killed 7 people.
Right.
Yeah.
Abbott Labs is the last ABT. You say it's a way to play the group defensively.
It is. So Miles Davis is a great CEO. He just made a big acquisition of St. Jude. This is a company that also has a lower dividend yield, about 2.3%, but they've been growing at about 18% per year over the last 3 years. And what you're going to get from them is stable growth, and again, at a below market valuation. So we like that. If we can get faster than market earnings growth at a cheaper price, that's a win-win for our clients.
Quickly, Nancy, the president has talked a lot lately about capping drug price increases. That's been the buzz for Washington for quite some time. What does that do to these companies?
Well, I don't think it's true, actually. He's really been talking privately with the CEOs about bring jobs back and I'll back off on pricing. He's also, said that he wants to fast-track drug approvals. That's really the big piece of news, because this was the same thing we saw in the Clinton administration, and those stocks outperformed the S&P during that period by over 100 full percentage points.
Wow.
So this is the solution to lower healthcare problems, advancement and R&D in pharmaceuticals. These companies will benefit.
All right, on that note, Nancy, thanks so much for joining us again. Have a great weekend.
You too, Sue. Thank you, Bill.
Nancy Tengler with Heartland Financial.